All right, let's talk Okta. They just released their second quarter numbers for fiscal 26, and wow, the stock's reaction after hours tells you pretty much everything you need to know. The market is buzzing. So in this breakdown, we're going to dive right in, look at the numbers, unpack the strategy, and then of course give you our call on what we think happens next.
So let's start with this quote from CEO Todd McKinnon because it really sets the tone for everything. He's talking about independence and neutrality in the age of AI. What he's really saying is that Okta wants to be the essential, trusted Switzerland for identity in a world that's about to be flooded with AI agents. It's a huge part of their story.
And you know what? The numbers absolutely back up that confident talk. This was a classic beat and raise quarter, the kind Wall Street loves to see. On the bottom line, non-GAAP EPS came in at 91 cents. That's a solid 7-cent beat. And on the revenue side, well, they crushed those expectations too.
I mean, just look at the scale of that revenue beat. We're talking a $16 million surprise. That pushed their total revenue to $728 million. That's a 13% jump from last year. And it's a really powerful signal that demand for what they're selling is holding up incredibly well.
Okay, but this next number, this is the one that really tells you about the future. Remaining performance obligations, or RPO. Now, all that means is it's the future revenue they already have locked in under contract. That number grew an amazing 18% year over year to over $4.1 billion. So this isn't just a good quarter, right? This shows they have a super healthy pipeline for the long haul.
And here's the other side of the coin. They're not just growing, they're growing efficiently. A 28% non-GAAP operating margin is seriously impressive. It shows they've got a tight grip on spending. It means they're growing profitably, which, in this market, is exactly what every investor wants to see.
So those are the numbers, and they're good. But the real story is why they're hitting them. So now let's peel back the onion and look at the strategic moves that are actually driving this awesome performance.
And the centerpiece of it all is this idea of the identity security fabric. Now, I know that sounds a little like marketing jargon, but it's actually a pretty big deal. The vision here is to create one single platform to secure every single identity, not just your employees and customers, but also all the non-human AI agents that are starting to pop up everywhere. They want to be the one-stop shop for all of it.
And they are actively building this thing out. 3 moves this quarter really caught my eye. First, they bought Axiom Security. That gives them a huge boost in what's called Privileged Access Management, or PAM, which is crucial for locking down critical infrastructure. Second, they're getting massive traction in the public sector, even landing their biggest deal of the quarter with the Department of Defense agency. That's a huge stamp of approval. And third, they're innovating on AI security with something called cross-app access, which is basically a set of rules for what AI agents are allowed to see and do.
So, you put it all together, great execution, smart strategic moves, and what do you get? You get management feeling confident enough to do the one thing investors always cheer for. They raised their guidance for the full year.
And here's the proof. They bumped their full-year revenue forecast up to almost $2.9 billion, and they lifted their earnings per share guidance to over $3.30. This isn't a small tweak. This is a big signal of confidence in how the second half of the year is going to play out.
So you might be wondering, what's behind all this optimism? Well, the CFO, Brett Tai, was super direct about it on the earnings call. He basically said that all those big worries they had about the economy and the federal business, they just didn't happen in Q2. So now they're taking that layer of caution out of their forecast. That is a really positive shift in tone.
Okay, a strong beat, some big strategic wins, and a raised guide. That brings us to the most important part of this whole analysis.
What's the call? What should we expect when they report Q3? And how should we be thinking about this stock right now?
Our call on Okta is an outperform rating, plain and simple. And here's why in 3 simple points. First, their execution is just getting better and better. Their sales teams are getting more specialized, more productive, and they're generating a record pipeline of new business. Second, their strategic position is rock solid. They're sitting at the intersection of 2 monster trends, AI security and privileged access management, which that Axiom deal makes even stronger. And finally, the guidance itself is the ultimate signal. When management stops being conservative, it tells you they see a very clear, very confident path to more growth ahead. So the bottom line is this. Strong execution and a perfectly aligned strategy have put Okta on a really confident path forward, and that's what's underpinning our outperform rating. As always, this is not financial advice.